If you're avoiding consolidation zones, you're literally throwing away the easiest money in binary options. Now, let's understand what consolidation actually is. Consolidation is when price moves sideways in a tight range. It's not moving up and price is not moving down. It's just bouncing in between a range. Buyers and sellers are roughly balanced, so price chops back and forth in what you could call a box. It's important to note that consolidation occurs on all assets and on all time frames, ranging from the 5-second time frame all the way up to the daily time frame. And a fun fact, the markets spend 60 to 70% of the time consolidating. And most binary options traders are not aware of this, or they simply ignore this. Now, right here, we have a great example of a consolidation zone. Price is moving sideways, okay? There's a balance between buyers and sellers. Price is not moving to the upside, nor is it moving to the downside. And this is exactly what we want to see. Now, there's one of two ways that you can mark up your consolidation range. You can either use horizontal lines or you can use a rectangle. Using horizontal lines, you want to mark out the top of the range and the bottom of the range. Okay, and it's not going to be 100% accurate. It's just an estimate. Okay, we've marked out the top of the range where prices reacted from on multiple occasions, and we've marked out the bottom of the range where price has also reacted from on multiple occasions. And what does this remind you of? Support and resistance. It's the same approach, it's the same idea. If you guys want to learn more about support and resistance, how to identify support and resistance, how to mark up your support and resistance zones, about a month ago I created a video where I go into fine detail about all of this stuff. The ins and outs of support and resistance. I would highly recommend that you guys go and check it out. The link will be in the description below to that video, or you can find the video on my channel. But here we have our consolidation zone. Here we have the top of the range, and down here we have the bottom of the range. And if we take a look at the bigger picture, because we're on the hourly time frame, the price consolidated in this range for quite a while. Now, this here was the first method that we can use to mark up consolidation. Now, the second method that we can use here would be using a rectangle. So the first thing that we need to do is identify the bottom of the range and the top of the range. So now that we've got that, we can grab our rectangle, mark out the bottom of the range, stretch it all the way to the top, and drag it across just like that. And now we've covered the whole entire consolidation range. Beautiful, far more visually appealing, and I personally prefer this a lot more over the horizontal lines. Let's get into another example here. So we're on the 15-minute time frame right now, and right in front of us we have consolidation. Price is moving sideways. There's that balance between buyers and sellers. So the first method we can use to mark up our consolidation would be with horizontal lines. Here we have the top of the range, and down here we have the bottom of the range. And all this is a rough estimate of where prices reacted from on multiple occasions. The second method obviously involves the rectangle. Down here we have the bottom of the range, and up here we have the top of the range. So now that we've identified that, we can take our rectangle, mark out the bottom of the range like that, and stretch it all the way to the top like that. So now we've covered the whole entire range, from top to bottom, wicks and bodies included. And once again, this is far more visually appealing. And this is how simple it is. It only takes a couple of seconds to spot and mark up consolidation. But here's the thing, if you're not trading off these zones, you're literally leaving money on the table. I'm about to show you two methods that completely changed the game for me. And once you see them, you will never look at a consolidation zone the same way again. Before we continue into the video, I would like to squeeze in a little promo here. I'm inviting every single one of you here watching this video right now to join my free binary options Telegram channel with over 805 members. We've got an incredible community of people, and in this group, I post tons of tips, tricks, advice, and educational content, such as this one, why you shouldn't rely on indicators. And this will help you expand your trading knowledge, level up your trading game, which is what it's all about at the end of the day. We've got all the bells and whistles. I even post free weekly signals, such as this one on AUD/USD, which I posted just the other day, a sweet 92% payout. Trade with the best and make some money while trading with me, because at the end of the day, that's what trading is all about, making money. Like I said, guys, it's completely free to join. No subscriptions, no fees. All you have to do is head to the link in the description below and join the FX Hype's free channel. Come and join this incredible trading community and start leveling up your trading game. If it's not for you, you can leave at any time. Let's get back into the video. Okay, so the first method we're going to take a look at here would be breakouts. So we're on the 1 minute time frame right now, and we have clear consolidation. I'm just going to grab my rectangle and go ahead and mark this up. Here we have the top of the range, and down here we have the bottom. Beautiful consolidation, right? Now, when it comes to breakouts, all that we're looking for is a firm break above or below the consolidation zone. Okay, we're looking for a candle closure, a firm candle closure above or below. That's it. Okay, it can also be multiple consecutive candles, but we're looking for that convincing break. So what happens here? As you can see, we got a break and a candle closure below the zone. This can also be seen as a support break. Okay. But this break right here isn't all that convincing. Reason being, okay, even though we got that candle closure, this candle closure and this break still remains within the estimated area of the bottom of this consolidation zone. Okay, so what you'll find happens a lot of the time is you do get that break, but it ends up being a fake out. Price reverses back to the upside immediately. So we want to avoid that, right? So how do we avoid that? We want to see some sort of continuation of that bearish momentum to the downside. Now, shortly after we got a break below the consolidation zone, the price pushed back up and retested it. And we're not going to get into break and retest right this moment. We'll get onto that a little bit later. All that we're looking for here is a nice convincing break below this consolidation zone. That's all that we're looking for. So the following candle that forms right here, this right here is what we want to see. A nice bearish candle closure with a small upper wick and no lower wick. This is far more convincing. So on this candle right here, because we've got that nice closure and continuation of bearish momentum to the downside, we can look to open a trade. So we've got that breakout below the consolidation zone and that candle closure. We've got the confirmations we need. Now, breakout trading is extremely aggressive. You're looking for an aggressive break of the consolidation zone. You're looking to enter in on a candle closure, and you're looking to get in and out of the markets as soon as possible. You want to be quick, no messing around. So on this candle closure right here, we could have opened a 1 or 2 candle trade duration. And keep in mind, your trade duration will be determined by the time frame you're trading on. For example, if we're on the 1 minute time frame, we're looking for a 1 or 2 minute trade duration. If you're on the 5 minute time frame, we're looking for a 5 or 10 minute trade duration. And if you're on the 15 minute time frame, you're looking for a 15 or 30 minute trade duration. You guys get the idea. A 1 or 2 candle trade duration. So because we're on the 1 minute time frame, on this candle closure here, we would look for a 1 or 2 minute trade duration, which means the trade would have closed on one of these two candles here. And that would have been a beautiful trade. In and out of the market like a flash. Let's get into another example here. Right over here, we have clear consolidation. Prices moving sideways. So what I'm going to do is I'm going to mark up this area with my rectangle. Here we have the top of the zone. And down here we have the bottom of the zone. Now we're looking for one of two things here. We're either looking for a break above the consolidation zone or a break below the consolidation zone. If we take a closer look here, as you can see, we got a break and a candle closure below this consolidation zone on this candle right here. And I don't know about you, but this candle closure is not convincing at all. We got a very small bearish candle closure here. We're looking for a clean break. And the only time we get a clean break is when we get a large bearish engulfing candle closure driving the price down. Or if we get that continuation of bearish momentum to the downside. And I mean, that would have been far more convincing to look for sells. But this right here, whatever the hell's going on here, does not interest me at all. And if you remember, I said just a few minutes ago that you're going to get those consolidation zone breaks, just like this one, and an immediate reversal back to the upside. You're going to get those fake outs. And I can guarantee you that a lot of traders would have been faked out here. So we've established that this right here is a clear and obvious fake out. What happened next? Price reversed to the upside. And if you take a closer look, we got a break and a firm candle closure above this consolidation zone on this candle right here. And this break right here is far more convincing than this one. Okay, we got a large bullish candle closure above the consolidation zone. And this candle has very small wicks telling us that there's very strong bullish momentum. And this is the kind of breakout that we want to see. So on this candle closure right here, this would be our cue to look for buys. So we'd be looking for a 1 or a 2 candle trade duration. Now, because we're on the 15-minute time frame, that would mean we're looking for a 15-minute or a 30-minute trade duration. So had we taken a 15-minute or a 30-minute trade, the trade would have closed on one of these two candles right here, and that would have been profit. Remember, breakout trading is aggressive. You're aggressively looking for entries, a 1 or 2 candle scalp. That's it. Okay, so we've just taken a look at the first method, which is trading breakouts off consolidation zones. Next up, we're going to take a look at the second method, which is trading break and retests off consolidation zones. Let's get into it. So just to clarify, we will be following the simple traditional break and retest system. If we have a consolidation zone right here, we'll be looking for a break above and a retest of that consolidation zone. And this is where we'd look for buys. And the same thing applies for sells, just the opposite. Okay, here we have a consolidation zone. If we get a break below, we're looking for that retest, and on that retest of the broken consolidation zone, we'll look for sells. That's pretty much the break and retest system in a nutshell. It's not as aggressive as trading breakouts. This approach is a little more conservative and requires a little more patience, but it is still an incredibly effective method to take trades off consolidation zones. So what we're going to do now is jump into some examples of how we can identify setups of consolidation zones using the break and retest system. Let's get into it. Alrighty, so here we have some beautiful consolidation. Price is moving sideways. It's consolidating. So what I'm going to do is grab a rectangle and mark up this area. There we have the top of the zone. Just going to stretch it all the way across to the bottom. And here we have our consolidation zone. Now, because we're trading break and retests, we're looking for one of two things here. We're either looking for a break to the upside and a retest, or a break to the downside and a retest. That's all we're looking for. Now, if we take a closer look here, as you can see, we got a break below this consolidation zone on this candle right here. And this is a very convincing break. We got a firm bearish engulfing candle, a long body with a small lower wick, telling us there's lots of selling pressure. So for me, this is a pretty convincing break. And the following candle that forms is also a red candle. So we've got our break. Now in this situation right here, all that we're looking for is a pullback and a retest of the broken consolidation zone. So shortly after the break, price ended up pulling back and retesting the broken consolidation zone on this candle right here. So now that we've got the retest, we can look for entries. But just because price retested the broken consolidation zone doesn't mean we're going to enter in immediately. That's a little too aggressive. On the retest, we're looking for one of two things to enter off of. Either a break of structure or price action. Now, if you guys are unfamiliar with these concepts, I've created individual videos going into depth about each of these concepts. And I highly recommend that you guys go and check it out. It'll expand your trading knowledge and it'll help you guys out a lot. The link will be in the description to those videos, or you can head over to my channel and you'll find the videos there. Okay, so on the retest, we're looking to enter in off of a break of structure or off price action. And if we take a closer look here, we ended up getting a double combo. We got a break of structure on this candle right here. And if you take a closer look, this candle engulfed the previous candle. A double combo. We got a break of structure and a bearish engulfing candle. And this here is an A+ setup at its finest. I mean, it just doesn't get better than this. So on this candle closure, we could have opened a 2-candle trade duration. Okay, so because we're on the 5-minute time frame, that would have been a 5 or a 10-minute trade duration, which means the trade would have closed on one of these 2 candles right here. And that would have been right on the money. Let's get into one last example here. So we're on the hourly time frame, and down here we have consolidation. Price is moving sideways, which is exactly what we want to see. So I'm going to grab my rectangle and mark out this consolidation. Okay, so here we have the bottom of the zone, and right over here we have the top of the zone. So this is the consolidation range. So now that we've marked up the zone, what are we looking for here? We're either looking for a break to the downside and a retest, or we're looking for a break to the upside and a retest. It's as simple as that. Now, if we take a closer look here, we can see that a breakout was lurking with these candles wicking above the area. And then all of a sudden we get a nice, beautiful breakout to the upside with this bullish candle right here. We've got a long body with small wicks telling us there's lots of buying pressure. So a nice, beautiful, juicy, firm break. So after breaking out to the upside, price continues to push, proceeds to consolidate a little bit, and then pulls back and retests the broken consolidation zone. So now that we've got our retest right here, we can look for buys. So we're looking to enter in off of a break of structure or off price action. We're looking for a bullish engulfing candle or a bullish rejection candle. So shortly after the retest, the following candle that formed engulfed the previous candle. Okay, it pushed above and closed above the previous candle's high. So this is a valid bullish engulfing candle. So now that we've got our price action confirmation on this candle closure right here, we could have opened a 2-candle trade duration. And because we're on the hourly time frame, we would have opened a 1 or a 2-hour trade duration, which means the trade would have closed on one of these 2 candles right here. And that would have been a winning trade. Yeah, I mean guys, these are two of the finest methods you can apply to take trades off consolidation zones, in my opinion. And depending on what type of trader you are, this will determine which method suits your trading style. If you're a more aggressive, impulsive trader, the first method, breakouts, would suit you better. But if you're a more patient, conservative trader, the second method, break and retest, will probably suit you better. And if you're unsure, try both. Go and backtest, trade in real time. That's the only way you're gonna know which method works best for you. But otherwise, I hope you guys enjoyed the video. I hope you found it informative. I hope you learned something new today. And if you did, go ahead and smash a like on the video and subscribe to the channel if you are new. And I will see you in the next video.